Hello everyone, this is Louis. Welcome back to the channel. If this is your first time here, thank you for checking us out. Now, we all know there are only two ways to make money. One is you work for the money, and the other is you let your money work for you. But when your money is working for you, there's a risk of losing your money when the market is not good. Wouldn't it be nice if we can invest our money without fear of losing it? And that's why today, I want to talk to you about segregated funds. Before we move on, please note, the comments made in this presentation is for discussion purpose only and should not be considered as giving you legal, accounting, or investment advice. You should always consult your own professional advisor before adopting any concepts presented in this presentation. So, what is segregated funds? Segregated fund is another investment fund. It works just like mutual funds. It invests in securities such as stock, bonds, and others. Its value also goes up and down, just like mutual funds. But it is protected by an insurance policy offering certain guarantees, such as capital protections upon death and maturity. Some even offers guaranteed lifetime income. People often ask, why is it called segregated funds? Well, it is because basically it is an insurance contract known as deferred variable annuities. The underlying assets of the funds are purchased and owned by the life insurance companies. The individual investor is only a segregated fund contract holder. Assets in these funds are kept separate from the insurance company's other assets. That is why it is called segregated funds. Segregated fund is not available from the banks. It can only be sold by a licensed life insurance representative. Unlike other investments, a segregated fund contract has three parties to the contract. They are the annuitant, the policy owner, and the beneficiary. The annuitant is the person whose life the contract is based on. The policy owner is the person or the corporation that acquires the segregated fund contract and the value in the contract. The beneficiary is the person who will receive the guaranteed death benefit upon the death of the annuitant. All segregated fund contracts have maturity dates. This is the date the maturity guarantee amount is available to the contract holder. The maturity periods are usually 15 years or longer. Most are now at age 100. Now let's take a look at how maturity guarantee works. At the maturity date, the guarantee amount will be paid out to the contract holder. The guarantee amounts are either 75% or 100% of the initial investment or the current market value, whichever is higher. Any withdrawal amount will be deducted from it. The maturity benefit guarantee looks very attractive because it appears that your investment is guaranteed not to lose money. But the fact is that this guarantee does not provide you with any protection of your investment if you redeem before the maturity date. Most segregated fund information folder contains a warning statement that any amount that is allocated to a segregated fund is invested at the risk of the contract holder, and this amount may increase or decrease in values. The other major features of a segregated fund contract is the death benefit guarantee. Upon the death of the annuitant, the death benefit guarantee will be paid out to the beneficiary named in the contract. These guarantee amounts are either 75% or 100% of the initial investments, or the current market value, whichever is the greater amount, of course minus any withdrawals. According to a survey conducted by Sun Life Financial in 2015, it indicated that 98% of the Canadians surveyed said it is very important to them at least some of their retirement income is guaranteed for the rest of their lives. And that is why some segregated fund contract provides a guaranteed minimum withdrawal benefit, known as GMWB. This benefit allows the contract holder to withdraw a predetermined minimum fixed percentage of the total contract amount each year, regardless of market performance, for as long as they live. This feature will provide the contract holder a stable and predictable lifetime guaranteed income to help manage the risk of outliving their money. Another attractive feature of a segregated fund contract is the reset option. Both the maturity and death benefit guarantee may have a reset options. These options allows the contract holder to lock in the investment gains if the market value increases. Most contracts allow a certain number of resets per calendar year, but each reset will restart the contract term and extend the maturity date. Therefore, it is not a good idea to reset the contract too many times. All segregated fund contracts are protected from creditors if there is a named beneficiary and certain qualifications are met. This is a very useful feature to protect business owners or professionals their assets from exposure to creditors. All segregated fund contracts are exempted from probate. The proceeds will pass directly to the beneficiary upon the death of the annuitant. If the beneficiary is in a preferred beneficiary class, such as spouse, children, or parent, then the proceeds is also creditor protected in case of bankruptcy. This protection applies to both registered and non-registered investments. This feature is not available with any of the bank's products. There are two levels of taxation in segregated funds. First, at the fund level, any capital gains, losses, and income from the fund itself must be allocated to the owners each year on a time-weighted basis. And the second one is at the investor level. When an investor redeems units from the fund, capital gains or loss must be reported the year of the withdrawal, regardless whether the withdrawal is from a systematic withdrawal or a one-time withdrawal. Investors sometimes are quite confused about their T3 slips from the fund company. Well, here's what you need to know about the T3 slips that you may receive at year-end. You may receive a T3 even if you didn't redeem any units during the year. It is because all income earned and any realized gain or loss from the fund itself are reported on your T3s. But the market value shown on your statement represents the unrealized gain or loss of your contract. This unrealized gain or loss are not reported in the current T3s until you redeem your units or close out the contract. Another form of taxation you need to know is that any guaranteed top-up amounts at maturity or upon death of the annuitant are reported as capital gain. It is quite interesting to know when a mutual fund investor redeems the units, the mutual fund companies are not responsible to calculate their capital gains or losses for them. Because of that, investors often underclaim their adjusted cost base, resulting in paying unnecessary capital gain tax. But with segregated funds, the insurance companies keep track of each owner's adjusted cost base and will calculate the realized gain or losses on the investor's T3. We all know nothing is free in this world. The segregated fund contracts guaranteed are not free. Several fees can be charged in a segregated fund contract, such as sales charges, insurance fees, management fees, early withdrawal fees, and small policy fee. Not all companies charge the same fee. The approximate all-in cost is between 1.5% to more than 3%, depending on the risk exposure of the investment and the period of the maturity guarantee. The shorter the term of the maturity guarantee and the reset features of the contract will contribute to the higher cost of the premium. Now let's summarize the key features of a segregated fund contract again. It has maturity and death benefit guarantee, reset options, protection from creditors, beneficiary destination, no probate or redemption fees. All these features are only available in a segregated fund contract. Some people argue that the premium for the protection is quite high, but considering all the key features and the market volatility in the recent days, paying 1 to 3% or more to protect the investment is worthwhile expenditure for a good night's sleep. Thank you for joining us today. I hope this episode gives you a better understanding on how the segregated fund works. If you enjoyed the presentation, please give us a thumbs up and feel free to share it with others. If you have any questions, please feel welcome to drop me a line in the comment sections and I will try to answer them for you. Until the next time, take good care of yourself and I look forward to seeing you again soon. Goodbye.